Oh, we're live now.
Hello, everyone. Welcome to Visible National Trust's monthly Trust Talk. I'm Eric Jorgensen, the Director of Beneficiary and Advisor Services of Visible National Trust. Today, we're excited to continue our live series about the essentials of special needs trusts. Visible National Trust is dedicated to enabling families to establish a financial continuum of care for disabled loved ones they expect to outlive by providing state-of-the-art, cost-effective special needs trusts to families and their trusted advisors. Please note that the information provided here today does not and is not intended to constitute legal, tax, investment, financial, or other advice. All content is of a general nature and does not address the circumstances of any particular individual or entity. Always seek professional advice for recommendations specific to your personal situation. Each month, we host these live Q&A sessions on LinkedIn to address your most pressing questions about special needs trusts. We record these sessions and upload them to YouTube and the Visible Learning Center on our visiblenationaltrust.com website, so you can revisit the information at any time. Joining me today is Lisa Cohen, the CEO and founder of Visible National Trust. Lisa has been a driving force in the field of special needs planning, and her expertise has helped countless families secure a brighter future for their loved ones. Lisa, thank you so much for being here today. We're thrilled to have you.
And thank you, Eric, for being such a dynamic and fun host.
Awesome. We're gonna go we're gonna go back to the basics and discuss what a special needs trust is and why it's so crucial for families with disabilities to consider setting one up sooner than rather than later. And for those watching or following along, these are going to be the same questions that we posted previously in our LinkedIn post. Nothing new, nothing, no gotchas. So we're going to start off with kind of a softball. Special needs trust and able accounts do different things. How does that work exactly?
Eric, that is a great question. And our friends over at Able do great work. So let me take a step back and say that for most consumers, we have tons of financial products available to us: bank accounts, brokerage accounts, credit cards, debit accounts. And we're not at risk at any time for anything bad happening to our money, except for some of the scamtastic things that are going on out there. But there's no legislative structure for anything, that money going away. For people with disabilities and their families, there's a very different dynamic happening. There are two types of accounts that work for people with disabilities that don't put their money at risk. One is an ABLE account, and ABLE accounts function a lot like a checking account. So an account holder puts money in, it's a self-managed account, so then they use it for disability expenses as they see fit. They put the money in as they see fit, they spend the money as they see fit. It's not professionally managed on a day-to-day basis. Right now, at the end of first quarter, the latest data that's available, the average account size in an ABLE account it's a little over $11,000. So these accounts are being used just as I described, and that's a great thing. What it isn't, though, is a long-term planning tool based on the way the account is actually structured. So a long-term planning tool that will establish, you mentioned the financial continuum, that literally will put money in place now that can be used immediately and or decades later, has to be something different and is something different than an ABLE account. And that's called a special needs trust. So they really do two very different things. They can be complementary. No reason if you're eligible for an ABLE account not to have one. But a special needs trust is for an entirely different purpose, and that is long-term planning for a continuum of care, and likely a time when the person putting money in the trust will pass away, and the person using the money in the trust will need those funds managed for them. Really important.
Yeah. And along that line of the special needs trust and the continuum of care, I've heard that only attorneys are the ones that can set them up. Is that accurate? Is that true?
So I would call that the number one myth that we hear about. So it certainly has been true that attorneys have written most of the special needs trusts. They've written the one we used, some fabulous attorneys worked with us to write the Visible National Master Trust, Visible National Trust Master Trust. So yes, attorneys do and likely should draft trust documents. The question is really much more about the trust document not being, it does not set up, you asked about, does it set up the trust? It absolutely does not set up a trust. Let's talk for a second about trust documents, right? So a trust document, any trust document, and there are lots of different kinds of trusts for different purposes. It's basically just a set of instructions. It says, Eric, here's how you should steward the funds of Lisa that are for benefit of Lisa. That's what it says. So it's a simple instrument in that it's kind of an instruction booklet, so to speak. A special needs trust has additional language in it that doesn't just describe how Eric should steward the funds for benefit of Lisa, but it also complies with Social Security and Medicaid rules about disability benefits. So it's slightly more complex, but regardless, having the document does not establish the trust. What's going to have to happen, if you have only a document and you're not partnering with a trust provider, is the trustee of the trust, when it becomes live, is going to have to effectively find a provider, find a whole set of partners, including having the trust document updated so it reflects, because these documents may kick around for decades. So you want to make sure that it's updated. You have to find investment services. You have to find a bank. You have to find a payments provider, may also be the bank. You may use some other tool, a tax provider, and somebody to handle all the reporting for the trust. So it's pretty complicated, and it's very confusing for a lot of people who've had this trust document written, but then are sort of at a stopping point about how do I actually do stuff? How do I put money in? How do I take money out? How do I actually work with this now? Because that's a separate step.
And again, that's applicable to any and all trusts. Even if you have a revocable trust that becomes irrevocable upon your death, the added twist, if you will, is with the special needs trust is you have to make sure you're not crossing Medicaid or Social Security and doing anything that they would say, nah, we don't approve of that. Correct?
That's absolutely, yes, you're absolutely right. When the trust isn't funded, it effectively doesn't live anywhere. So trusts that are holding assets are live, but a trust that is written and sort of sits over here to my left, isn't in the file cabinet, doesn't have all of the attached provider services. And that's really kind of the crux of the issue, because it may come live at a point when you least expect it, and your disabled loved one is sort of plunged into this transition at perhaps a vulnerable time. And to me, that's one of the most important things families should be thinking about, is when the trust exists, how is it actually going to work inside the family unit? How do you actually relate to this account once it moves from document to trust?
And that's a really good segue into the next topic. And as we're moving along, I want people to think about this. It's not as black and white as, oh, I die, the whoever's probating my will and setting everything up comes in and everything's going to work just the way it's supposed to work. We're going to take this peg, put it in that slot, and boom, 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 Bob's your uncle. It's families are going to be dealing with grief, with potentially Medicaid and Social Security, and there's going to be a host of other things. So I see it as one less thing to add to the mix. And then, like I said, it's a segue into, we've been told that writing our own trust document is the usual approach, especially as trust. And Lisa, I think I shared with you when I was a financial planner, that's what I was taught, right? You really want to go and get the attorney to draft the trust, and it can be expensive, and it takes time, candidly. I know, speaking from personal experience, it was not a speedy process between meeting with the attorney for the first meeting, not having everything I needed, going back, and then reviewing the trust and going back and then getting assigned with notaries, on and on. I mean, it was just, and then you have to do that every 3 to 5 years or something similar. I mean, I'm speaking from my personal experience. I'm not saying there's a hard and fast rule that you have to do all that, but that's what it
Right,
felt like to me.
right.
So is there another way? I mean, it sounds like there is.
Yeah, there is another way, and I will talk about that. I want to preface that a piece of information by saying that uh, the reality is most special needs trusts, the vast majority of special needs trusts, are not very different from one another, right? The people setting up the trust and the disabled loved one may live in different states from, all the trusts across America. So the state of establishment of the trust will be different. But the reality is the terms of the trust, in other words, back to the example, what does Eric do differently for Trust A or Trust B, for Lisa's trust or Sam's trust? The answer is not that much. So unless you're in a situation where your family structure or estate plan really calls for a document that really is different because it covers some other aspects of the estate plan, it's very unlikely that a family will need a unique trust. Um, and so what does that mean in all practicality? If you don't write your own unique trust document, that means you can work with a trust for special needs trust provider who has a master trust document, which is an already written document that doesn't cost families anything to participate in, to use effectively. And a master trust document works just like a 401k plan or a 403b plan. And it just means that there is one master trust, and everybody who wants to use the master trust sets up their own trust account with its own tax ID, and it's in the name of the beneficiary, disabled beneficiary. It's exactly the same thing, but much easier. So you get to the same place with a much simpler process. And yeah, we think it's a better mousetrap, and shameless plug. That's what we do here at Visible. But yeah, we do, and for people with us today, Eric and I spend a lot of time talking to families, and we hear a lot about people's frustration with they have a trust document, they've spent money on it, they've spent time, they've gathered paperwork and facts and data and account information. And there's a frustration that there's a big gap between I've got this packet, this file, and now how do I make it operational? When you use a master trust model to set up your special needs trust, there is no gap. It's all part of a whole. So it's kind of a seamless, all-in-one solution. Because families don't need to make it extra complicated. There's just absolutely no need to do that. And stuff happens in our world, and we'd much rather give families the peace, so that they can come to us and just do their financial stuff and take care of their loved one.
And so I want to clarify, earlier you had said it effectively doesn't cost anything. That so it's not that they're free, because different trust providers have different account minimums, and nobody is going to give you a service for free and expect that company is going to stay in business. That's just not.
Yes. Right.
So how does it work?
So in our case, and this is true with other folks who use a master trust model, the fees for service are generally based on the assets in the trust. So they're charged a percentage of the trust assets every year for stewarding the trust. That's how most fees are structured. So all of the trusts that I'm aware of have that fee in place. Some have lots more fees in place too, There can be fees, upfront fees, and there can be funds retained by a provider on the back end when the trust is closed. There can be transaction fees. So it's important. The most important thing in understanding the costs is making sure you have all the information from the provider about really the lifetime costs of owning a trust, of working with that trust provider and having a trust in place with them over a very long period of time, so
Yeah.
that you fully understand that. In terms of the minimums, there's no law out there, there's no rule, and Medicaid doesn't care that certain types of providers, like companies, the companies providing trust, there's no rule about who has to have what amount minimum. There's no maximum amount you can put in any special needs trust. That's really important to know. But there's no law, there's no rule that says certain types of shops who provide special needs trusts have any set minimum. As a rule of thumb, I will share banks and trust companies are particularly well suited to working with families with larger account balances. So we hear that from Eric, families we speak to, that they've talked to a bank perhaps that they work with, and the minimum is $2, $3, $5 million. There are local and regional trust providers who will accept balances often under $50,000. To your point about it's very difficult as a trust provider to provide services with to be economically viable unless there are assets in the trust so that we can pay our bills and stay operational. So the fees then are often for providers who kind of specialize or want these smaller trust accounts, they can be higher. And sometimes it's important to make sure that they're fully disclosed and you really understand what that looks like. Our best advice is really to look for a trust provider that you feel comfortable with, where you think the costs are reasonable. And that's kind of the mission critical thing, and make sure you understand all the fees, no surprises, fully transparent. But absolutely, there is no rule about what kind of provider can or should accept a certain size trust. The reality is, my point of view as both a leader of the organization, thinking about it from how are we successful, our goal is to provide these services and at a reasonable cost, and a cost obviously that is reasonable to us as a business in terms of operating and growing over time and being here for our families.
And I think the average person would understand that. I mean, if they were, when you're running your household and you think about what you're doing to run the household, you have to make a certain amount of income to pay your grocery bill, to put fuel in your car. And then,
Yeah.
you don't want to just get by, right? So you want to make enough money that you can, do extras.
Mhm.
In a corporate world, the extras mean pay salary, and build a little bit of emergency fund, just like families do. And I just want to reiterate because again, as a financial planner, I was taught this, that, certain trust, if you're not going with an individual trustee, then, you only want to go with somebody who's not an individual or a big bank trust company if you're going to do smaller dollar amounts. And I don't know where that came from. I still don't know where that came from, because functionally we're doing the same amount of work.
Right.
So it's, and I would argue we're probably doing more because we do a lot of the disability consulting.
We do.
And so it's kind of like, well, you wouldn't expect anybody else to, you wouldn't go to work
Right.
and say, well, boss, I'm going to work Monday and
For
Tuesday for
free.
free, but
Right.
Wednesday, Thursday, Friday, you better pay me. It's crazy to me.
Yeah.
That's just a little bit of a rant though. So
No, that's okay. I do think the point about, there are definitely some myths in special needs trust land that it's just really important for families to understand that those things are myths and don't really shouldn't impact the decisions they make about what's right for them.
Yeah.
I mean, if it is a Medicaid rule or it is a Social Security rule or it is a trust rule, that's a rule. We have enough rules in this world that we don't need to add ones that are not really rules.
Yeah. Yeah. Well, no, this is awesome. Thank you, Lisa, for sharing your valuable insights today. And thank you to everyone who joined us for this session. Again, you can, if you weren't able to join us live, you can get it from the YouTube channel. We hope you found the information helpful and that it gave you a clear understanding of special needs trusts and how they can help your family. In addition to the YouTube channel, it is on our website, and you can get to the website from the LinkedIn, or by Googling Visible National Trust. We are here to support you and your family through transparency, connectivity, and access to special needs trust solutions that simplify caring for a loved one with a disability. Please reach out with questions anytime. Contact information is on our website. We're here to assist you on your special needs planning journey. We will be back next month with another Trust Talk session, so be sure to mark your calendars. If you haven't already, please follow us on LinkedIn. That's the visible page. And subscribe to our YouTube channel to stay updated on all our latest content. And I would also ask you, if you have questions that you aren't getting satisfactory answers to, or you're just like, well, I can't find anybody to give me a straight answer, and it's related to disability planning, trust planning, please reach out. Again, the information, the email is on the website. Please reach out and let us know. And until next time, take care and stay informed.